Hello everyone, this is Accounting Education channel. Today we'll be talking about cash flow statement and how to prepare it using indirect method. We mentioned before that we're having three main financial statements. First one, income statement, which is showing the result of business operation over a period of time. Second one is balance sheet, which is giving us a snapshot of the business financial position at a specific point of time. On the other hand, cash flow statement will tell you how the cash came in and came out from the business. It's very important financial statement as it shows how the business is managing the cash. Quick recap about the format of cash flow statement. We mentioned that it's containing three sections. One, cash flow from operating activities. Second one, cash flows from investing activities. And last one, cash flow from financing activities. We also mentioned that there are two methods can be used to prepare cash flow statement. Direct method and indirect method. And the difference between both is how we are preparing cash flow from operating activities. Most companies are using Accrual Accounting and they prefer to use indirect method to prepare cash flow statement because it's easier to prepare. In Accrual Accounting, revenue is recorded when it's earned, not when cash is received, and expense is recorded when it's incurred, not when cash is paid. So the income is not equal to cash. And in order to reach to cash flow from operating activities, we take net income from the P&L and apply some adjustment in order to make the income matching with cash. The most common one, depreciation and amortization, gain and loss on sale of asset, and working capital adjustments. Now let's move to our example. This is our example for cash flow statement using indirect method. In order to prepare cash flow statement, we require information from different sources. So we're having balance sheet and we're having income statement besides some additional notes. This information here or numbers can be identified as well by analyzing both balance sheet and income statement. I already also built up the template for cash flow, and we can see here that it's already split between cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. We mentioned before that the difference between indirect method and direct method is cash flow from operating activities, while investing and financing is same in both methods. Both balance sheet and income statement will help us to fill the data related to operating activities, while the additional note will help us to fill the data related to investing activities and financing activities. Cash flow from operating activities using indirect method will start from net income and then pass different adjustments to make this income matching with cash generated from operation. Those adjustments are coming from income statement and balance sheet. From income statement, we will look at non-cash related transactions, and the most common one is depreciation and amortization and gain and loss on sales of non-current assets. So starting from net income, this is our net income here, 94,000, and then we'll start looking at the depreciation. So we are having depreciation here. This is will be adding back, and then we'll look if we are having gain or loss in sales of assets. In our example, we are having gain, so gain is mean that we need to pass negative adjustment. By this, up to here, we are covering income statement. Moving to balance sheet adjustment, our main adjustment related to working capital, receivable, inventory, and payable. We mentioned before an increase in asset means that more cash is used to finance working capital, so we'll be passing negative adjustment, while decrease means that we will be passing positive adjustment. And for liabilities, it's going to be otherwise. An increase in liability will be passing positive adjustment. So let's start looking at working capital. We are having first receivable. I'm going to calculate the difference here. We are already having two periods here to calculate the difference of movement in working capital. So receivable got an increase by 7,500. This means we have to pass this negative adjustment. Now inventory. Inventory got decreased by 1,000. So we'll have this positive adjustment. And moving to payable. So payable got increased by 4,000. This is again positive adjustment. And by this we cover the adjustment which is related to balance sheet along as the cash flow from operating activities using indirect method. And this is our total here. Finish the rest of the cash flow statement and we'll start filling the data related to investing activities and financing activities. Let's go through the notes and see what is it exactly. So we're having purchase of equipment, we're having proceeds from sales of fixed asset, and we're having purchase of ABC stock. This is 3 here is going to be investing activities. Then we're having loan paid, long-term loan proceed, and share issued and dividend paid. This 4 here is going to be cash flow from financing activities. So let's start from investing activities. We said that we are having purchase of equipment. This is going to be cash outflow. We paid for it. Then we have proceed from sale of equipment. This is cash inflow. Positive. And then we are having purchase of ABC stock. This is again we paid for the stock, so it's going to be cash outflow. I will pass this adjustment, and we are done from cash flow from investing activities, and this is our total here. Let's move to cash flow from financing activities, and we'll start with first one, receipt from issue of share capital. This is going to be cash inflow. And then we are having also receipts from loan. So this is again cash inflow. And then also we paid part of our loan. This is going to be cash outflow. And also we paid some dividend to our shareholder. This is again cash outflow. So we covered the cash flow from financing activities. This line here will show us the net increase or decrease in cash. In our example it's increase, and I already put the formula here to capture the 3 totals. What left is to add the cash from the beginning of the period, so I will link this to 2019 cash balance. And we are having end of the period cash. Now to ensure that our workings file will convert with our balance sheet number, and we can see that it's matching. This is very important. So we covered the cash flow statement now. If having any point which you feel that was not much clear, mention the same in your comments and I'll try to explain it further.